Chris. Well, I'm very pleased today to be able to introduce Greg Dufour, Camden National Bank, to be part of our monthly speaker series on economic and workforce development. Greg joined Camden National Bank in 2001 and has served as president of the bank since 2004, as well as chief executive officer of Camden National Corporation since 2009. I should mention that Camden National Corporation is now the largest publicly held bank holding company located in northern New England. Currently, the company has asset holdings of $4.9 billion operating in Maine, Massachusetts, and New Hampshire. Greg was born in Maine in Old Town, and he is a graduate of University of Maine. He has been out of the state to receive his master's of business administration from the University of North Texas in 1984. In 2018, Greg was named to the Maine Business Hall of Fame, and in 2019, he was named by Maine Magazine as one of 50 Mainers creating a brighter future for our state. This was in recognition of his development of the bank's Hope at Home program that has provided over $500,000 of unrestricted funds to homeless shelters in the communities the bank serves. Greg Dufour and his wife live in Rockport. They have 3 grown sons. Please welcome Greg Dufour.
Great. Well, thank you, Jonathan, and thank you, Chris, and good afternoon, everyone. It's great to see a lot of familiar faces and many new ones as well. And it just shows how much we've continued to grow as a community. There's nothing like trying to get a CEO that brings them to their knees by saying, let's share a screen. So let me attempt to do that here. I failed my first test earlier before everyone joined. And there hopefully you're seeing that.
We're pro. Camden National now has a new audio visual executive as well.
Actually, my technology people would be shuddering if they knew that I was doing this on my own. They get more upset about what I may break rather than how I achieve things here. But it's great to be here this afternoon and to reconnect. And really doing this virtually is just a reminder of what we've gone through in the past year and even more historically. And I know some of you all have been members of the Rotary for many years, and you've heard from my predecessors, Bob Daigle and Keith Patton. But I am willing to bet I am the first president and CEO of Camden National that has probably been before you, without a tie on, to do a presentation, and definitely in jeans doing it. So how much we've come as a whole society and community through the pandemic. And that's one benefit and opportunity already. But today, what I'd like to talk about is the post-pandemic opportunities and challenges that we've seen and some of my views of how we've handled things. So I'll really share with Camden National Bank how we responded to the impact of the pandemic, as I think it illustrates how the pandemic's impacted many businesses, organizations, and people, and how it will impact us in the future. Secondly, I'll build off that topic to make some commentary about some of the local economic opportunities and challenges from my perspective. And finally, share some thoughts on the important subject of workforce housing, which I know is an important thing for many people on this call as well as the Rotary. So with that, and hopefully my page has changed. Jonathan covered a few of these items, but I think it is important to set the stage of where Camden National started, because that does influence what's happened to us over the past year. We were founded in 1875 by 6 local business people who are our original shareholders with $10,000. And as the folklore of Camden National is, it was in the back room of the Five and Dime, which is located on the corner of Chestnut and Elm Street, really the space that we occupy today. And so it's something that I share this story with every new employee that joins us, because we were founded by community members and really to benefit the community, and that's within our culture today. Now, 146 years later, we are the largest publicly traded bank headquartered in northern New England. We've always been shareholder owned, whether it was the 6 original owners, all the way to now having a very broad ownership throughout actually the country. $4.9 billion of assets. That is a lot of money. That puts us as a very large bank in especially Northern New England terms. But I would just point out that it makes us still a very small bank on a national scale, where we're routinely dealing with people that have trillions of dollars of assets. We have 58 banking centers throughout Maine and 2 offices in New Hampshire and Massachusetts. And then also we have 630 employees, 158 or 25% of our employee base is here in Knox County, with 109 of those people at the Hanley Center here in Rockport. So we've come a long way since our humble beginnings, on this street corner. And as I also tell our new employees, our founders couldn't have picked a better street corner in the state of Maine to create a bank and create an institution. And it's up to us not to mess it up, because this is a great place to be. When we entered the pandemic, and it's interesting, we just kicked off today recognition of a year anniversary of when we really truly felt as an organization and really as a community, the impact of the pandemic. We entered this uncharted territory and saw many challenges, but also immediately we realized we had many strengths entering the pandemic. So for example, employee engagement was one of my most important assets in our organization. For nearly 25 years, we've conducted employee surveys, but more importantly, recently, we expanded our relationship by partnering with the Gallup organization to really measure engagement versus just satisfaction. We took that up to another level. What that provided us was with the knowledge that we had a very strong level of employee engagement, but we also had a very strong baseline to measure that engagement throughout the pandemic. And throughout the pandemic, we were surveying our employees to seeing how they were adjusting, to seeing if they kept up their engagement on a really genuine level. And sometimes we found there were things that we needed to do. It was first step of engagement is, do people have the resources and tools to do the work they need to do? It was in the home environment. We found out some didn't. So we bought home office equipment. We allowed people to come in and get their office chairs. If they needed to grab extra monitors from their office, or we could ship them to them, we did that to help them adjust and to make that basic need of getting their work done by having the right tools. Sounds kind of simple, but when we're operating and changing over literally a matter of days, it was very important to make those adjustments. Working with Gallup, though, also gave us access to a global knowledge base, as well as a lot of data that we could measure changes in what was happening to our employees against what was happening around the country and even the world and within our industry. And that helped influence some of the decisions that we made. We also, though, realized that over the past several years, we had made many investments that were within our paradigm at that point, but the benefits of those investments quickly accelerated on us. So within the technology world, we had been moving to a cloud-based computing environment for many, many years, spending thousands and thousands upon dollars to do that. Now, when I joined the bank, just to put it in perspective, every time if you went to one of our branches and cashed a check, that piece of paper would cross, that would be processed a little bit, honestly, at the teller line. It'd be put in a bag, a courier would come up, it would be driven to the Hanley Center here in Rockport. Banks across the country, that's how we did business. And sometimes if you were traveling late at night, it was interesting, late at night on main roads back, this just 20 years ago, you would see cars parked on the side of the roads, and that were, a lot of them were couriers handing off bags of checks and items in paper form to come and be processed. We also had our own mainframe computers here in Rockport, as well as in a disaster recovery space to process all that work. And we managed that. Several years ago, we made the major investment to digitize all that work, to really run the computers on a cloud base We now work with a provider. So when you cash that check today, it gets scanned in, it interfaces and is digitized. It goes to a very secure, very big facility in Texas that we use to process all our work. And that also gives us, by the way, an immense amount of disaster recovery space. So we had that freedom now that we weren't necessarily contingent on cars running up and down the main roads or needing to run the computers, the mainframe computers that we had that were critical to our operation. That gave us a lot of flexibility to manage through the pandemic. We also had a large commitment over several years, digital banking. So when we look now, we have deep capabilities in web, mobile banking for both consumers, which many of you probably see, but also more importantly for businesses. So we made those investments going in. And we were also heavily invested into really discovering how to communicate digitally or virtually. We had those tools in place. For us, we have an internal instant messaging system or a chat feature that we can communicate to each other. We invested in not Zoom, we use WebEx, which is a Cisco product. So we had that virtual meeting capability all before the pandemic. At that point, we thought that was nice to have stuff, maybe some cool things that the IT people put in, but it was critically important when we moved our people to a remote environment over a weekend. And then finally, and we say this a lot, we had some luck. And one example of that luck that we had is when we moved, we went home on a Friday. And if you recall, then, over the weekend, schools closed, government placed isolation, quarantine orders in place. We realized over the weekend we could not bring our employees back to work. And a lot of us had laptops, but not all of the employees that needed to work remotely had laptops. And as we were scrambling around saying, how can we get through this? Somebody from IT said, in December, we had this great deal from a vendor and we bought 100 laptops that we have sitting in storage up here at the Hanley Center. Can we use them? So when other companies are struggling just to find computer equipment, we already had 100 laptops, and that pretty much between laptops we had in the system already, those 100, there are really only a few employees that we had to move an actual desktop computer to them, all because, and again, the Camden way and people who know Camden for a long time, we're pretty efficient. So all because some smart person was saving a few dollars in December, and it became probably one of the most strategic expenditures we made probably in 2019 entering 2020. So that's how we faced the pandemic. And as time went on and very quickly, we started leveraging different things. And like this type of discussion, doing it virtually really opens up things. And some organizations really started putting virtual content out there. And my executive team and I had the opportunity to participate in some of these virtual conferences. And we were able to, listen to this gentleman, David Rubenstein, who's a commentator on PBS and a business leader, former chair of a major investment firm. And he really gave this quote that really dictated how we've been managing ourselves over the past year. And he said that a crisis really changes the paradigm, but it accelerates the trends within it. And through kind of that confusion that we were all facing, we're facing this as an organization as well. And this is in the April timeframe. This really hit home to us, and it let us understand some of the strengths that we had, but also where we needed to very immediately alter and change our organization for the future. Now, there were times a year ago, I will admit, it didn't look good. And I would share with people I worked with, and I've been in banking for 30 plus years. I've managed through all kinds of downturns, recessions, the financial crises. And in a way, we know how to do that as bankers. If you've been around, we know a financial crisis may not be pretty, but we can get through it. A pandemic, we've never been through together. So this helped solidify that. It also helped me personally, honestly, to say within the challenge of the pandemic, there's a certain amount of optimism that we can reinvent our organization. We can reinvent a lot of things. And for us, those three accelerants and that start of reinventing ourselves, we identified as increased digital usage, financial empowerment, and hyperconnectivity of people. And so let me go through um, those three major areas to just shed some light on how we use that as call it our North Star, if you will, for the past year, but more importantly, how it will impact us in the future. And I feel a lot of other organizations will have their own accelerants, and one's very similar to this. So the first is digital usage. And just to put it into numbers, it's amazing that, here there's this picture of our app. You can pretty much do most consumer transactions from our app. We had 17 million digital banking logins last year compared to 2.1 million teletransactions over the telelines. Our call center activity, we saw a 32% increase. You can see here a 41% increase in secure online chat. 39% of our mortgages start with an online application now. And we saw a 41% growth in online account openings. And I can tell you, as we dive into that data, it spans all kinds of age groups. This isn't just millennials using these. It ranges from, millennials all the way to, 80-year-olds and plus. And maybe some of you do as well. And I think that is one key. We don't look at technology as something that we're building or that we're investing in for our younger customers, even though that's a major part, but it's for all our customers. And so we try to be very inclusive in how we move that forward. This is a major change in banking for us. It also poses our digital opportunities and challenges. So first of all, sustained customer engagement through digital channels is very important to us. Will these numbers stay up? Will those increases stay up? Will customers keep on using a digital channel versus our physical branch network? And that's the challenge. We have 58 locations. They are staffed to a certain amount of volume of customers coming in. But will they come in as things settle down? And as the pendulum may switch from all digital, but as more and more people get vaccinated, more and more people feel comfortable being out in the public, will they come back into place into our branch system, just like many retailers are facing as well? Now, another opportunity is because of the digital world, we're less constrained by our physical locations to compete for new customers and new markets. We can reach out because you don't need a physical presence to do banking anymore. However, where we may seek markets, we have other competitors that don't have the barrier of having to build a branch in our current markets today. So all of a sudden, our competition has broadened beyond just local banks to now it can be virtually any bank anywhere coming in, competing for our customers. That's a whole new shift for our business. Again, a lot what many of you are probably facing as well. Now, it's interesting to see as customers move to digital, as we've all moved to digital, whether maybe not just your banking services, but think about Amazon or your shopping, you're really also shifting to a self-service model. However, our challenge, and I believe where the future of our branches are, that when people do need our help, and this should say in person or in our physical locations, it's going to be for more complex and urgent needs. And so that will shift a lot of things that we have to do. We'll be less transactional focused in the future and more consultative in our branch networks. And for me, honestly, I think that's exciting from a person's career perspective. And especially for our people that are out in our branches today, they are already the experts doing this. And so they are on the ground and they understand on a very physical, granular basis how banking works. So as they progress through, I think they're going to have a higher competency than what you may see in a few years, where somebody who you may meet with somebody and they never have cashed a check personally, let alone process one for customers. So I do think that's a unique thing that we're seeing in our employee base today. And finally, our investments in technology have positioned us well. They helped us quite a bit. But the future investments are going to be more significant, more costly. And we have to balance that out to serve the needs and find resources that we can invest into this. Because for a bank or for any organization that is dealing with customers, investing in technology is going to be expensive, and it's going to be needed. If not, you may not be relevant in the future. So those are some of the challenges that we're facing now. But all in all, I would tell you, I've view them more as opportunities and things to work around. The second accelerant that we looked at was financial empowerment. And this is a big, big topic. And the headline here is the economic impact has been uneven. And we need to understand that many businesses and people, and we see that in our own community, are under significant economic stress. Where on the other hand, there are some people, some businesses that have flourished over the past year in the pandemic. And we have to understand that. Our view on empowerment is to help both groups. And where I think that the pandemic has really altered the thought of financial empowerment, is the term we use, is if you go back a year ago, people were worried, is the stock market going to crash? Do I have enough savings? Can I, afford healthcare benefits? All of these things, when the stock market dropped, Audrey's here from our company, she'll know the exact number, but when the stock market drops 25%, we were all scared. Now, when it's up and back to record levels, we feel a lot more comfortable. But that scared a lot of people in financial empowerment. Now, you take the less affluent that don't have money in the stock market, that don't have savings, period. They haven't recovered yet. And so for us, we have to, and this is really back to our community banking roots, we have to figure out how to really serve both ends of that spectrum. And I'll come back to another comment on that in a little bit. So when we look at the opportunities and challenges, again, higher savings levels provide resources for banks, businesses, and individuals. Deposits still fuel the banking system. But, we're wondering, will people continue to save? And yet, again, many people do not have any savings. And we're seeing that with the next round of stimulus checks. We see it, all banks see it. Deposit levels nationally have increased over time because people got some of that financial benefit and they kept it in savings accounts and not spending it yet. That may mean people are saving for those rainy days, but that is liquidity that's in the system. But there's still the element of society that has to spend that money for food. We have seen a big increase in customers and clients and a greater demand for financial education. And we're working and developing tools to do that. We have leveraged and we have a lot of webinars. WebEx meetings is the platform we use as Zoom meetings, just to educate. And we have been pleasantly surprised by the amount of participation that we see. There is a new hunger for people to want to know more. And I believe that's part of the empowerment that people are taking of their own financial situations. And then finally here it's probably not an opportunity, but I wanted to put this on to emphasize it, is portions of our society have increased wealth, but we have a significantly growing wealth gap that's been accelerated in the pandemic. And that's going to take a lot of people. It's going to take society to work through. But we're seeing that all the time. I can see that in my employees. And this is really a statement that I think that's not just a challenge for Camden National, but it's a challenge for all of us, as community leaders. This funnel areas, hyperconnectivity is very interesting. And I shared with you how we already had invested, into ways to communicate virtually or digitally. But as we sat back and I asked the folks to look it up, last year we had 121 employees join us, and many have not yet set foot into a Camden National location. They have joined us online. We have onboarded them online. They are working from their homes. They have not been in to one of our facilities yet. That is totally different than the employee experience that we've ever had before. And it also includes 2 executives that I've hired at the start of the pandemic due to a retirement. And they have probably been on site maybe less than a half a dozen times. One works in the Portland area from a lot from his home. And another one is working from Connecticut, even though he's bought a house here in Camden. He bought it, and then with the restrictions on travel and just health concerns, hasn't even been into his home in Camden for more than a couple of times. But that's a total change. Now, the significance of it you can see in these statistics here in virtual meetings. To point out, this is just 2 months, January and February of this year. We chat in our employees 700,000 times with chat messages going through our virtual product there. We set up, and that's again, these small virtual meeting rooms we can have 50,000 times within the company. And the big one is 4,500 video web-based meetings have been done in 2 months alone. And I joke, I think I've been in 4,250 of those meetings online. But the world has changed. We operate completely virtually. And even now today, this just references 75% of our non-banking center staff works remotely. And that is really changing the whole relationship that we're seeing within our workforce. Now, what this has for opportunities and challenges is remote work. It opens up for different workers, different types of ways to communicate that can be very exciting. It really helps us redefine things here, but it also challenges us to how do we build our culture. Camden National Bank has a strong culture, and I truly believe it's because of where we are and who we are. Prior to the pandemic, no matter where an employee joined us, no matter where they would work, they would have a stakeholder orientation meeting here at the Hanley Center here in Rockport. And we did that because we wanted to bring new employees back to where it all started and to get that feel for, here's the central part of our organization. But what we've discovered is that we don't need to do that. How do we balance building culture and engagement and loyalty when people may not be setting foot into any of our locations but a couple of times a year? Now, the virtual communications allows for a lot of flexibility, but we're already seeing the challenges that we have on socialization, again, back to culture, as well as that work-life balance. A lot of the feedback we get, people like working remotely, but they miss seeing their coworkers. And the other challenge is that if people are working in their homes, they're not leaving their office, shutting down their computer, getting in a car, driving home. They may move from one room to another, or from the kitchen table and clear it off. It's hard for our employees to struggle, find that balance of work life. And then finally, and I think this will impact all kinds of businesses, we can communicate, work, and shop where we want, when we want. But that's the Amazon effect. That's really rapidly changing all of our organizations. And what I would say is, you look at what the Amazon effect is that we're very used to going online, huge selection of whatever you're looking for, and it can land in your doorstep in a couple of days. Just follow a UPS truck around and you see boxes upon boxes piling up on people's doorsteps or at mail drop-offs. Think of what that does to our local retail community if that doesn't shift back to people wanting to go and shop for something in our local stores. So that's going to be an interesting thing. And it also impacts consumer behavior because people are more demanding of it. I want it. I can get it in 2 days. I can slap a label on it and get it returned if I don't like it. Totally different mindset for consumers that is now accelerating through the pandemic. So finally, some of the things that we know now, we've been fortunate, as I mentioned, 25% of non-banking employees come into the office at least one day a week. So that means 75% don't. We've been fortunate. I know some organizations say that they are seeing drops in productivity. We have actually maintained, and in some cases, improved our productivity. And I think that's just really the strong work ethic that we have the team here. But I think that's probably something that'd be interesting, other main companies, their views. We do see that you can improve engagement in a remote environment. I mentioned that we use Gallup in measuring our engagement is a very scientific approach they take. We, prior to the pandemic, I think it was in August of that year of 2019, we had our engagement scores. It was actually in the top quartile, something goal we set for ourselves. We redid it in the middle of the pandemic, early in the summer. Our engagement actually went up, which I still think is a great accomplishment. And when you sit back and say why, it was because we were constantly out there asking people, how were they doing? And in some cases, honestly, recognizing people's work at it. So you can improve engagement, but you have to work at it. Again, employees really like flexibility of remote work, but they miss those social interactions. And that's something that we're working through is how do we balance what employees want from both being remote, but also meeting it with their coworkers. And, with that, just want to make sure I'm there. Okay, I'm sorry. With that, we're still learning. Social distancing is going to be a major issue that we have to handle with our employees and customers. Just last evening on the news, I heard where the CDC is considering a 3-foot buffer versus the infamous 6-foot buffer. That's a big change. Obviously, Maine is the governor's announced loosening of restrictions, but we have to work on that. And we'll also start bringing up the questions of the impact of vaccinations. When are you vaccinated and who won't become vaccinated? And some of that will settle out hopefully by June, July timeframe with the president's goal. But there are significant portions of the population that do not want to be vaccinated yet. So how do we handle that? We also have to continuously try to find out what our customers want. Are they going to return to in-person banking? What will they do with the digital interactions? Again, this is the same that many of you may face or businesses throughout a community will face. And I would just encourage people to ask that question ahead of time. And finally, with these things, looking at what the employees want, their work schedules, sharing office space could be something. But we need to drive in and really start that conversation. And we're doing that now because as I turn to this next slide, I really believe there's an opportunity for organizations to reinvent the employer relationship here. But it will take work. Right now, we are surveying our employees to see what they want to do remote work in the future, how many want to come back 5 days a week, what will that do? And that can help us reinvent it. But then we have to answer the questions, how do we socialize, mentor, and be role models for each other? When you're starting your career, you probably looked at somebody who was successful and said, oh, I can emulate them. If they work from, 7 to 6, I may do that because I'll be successful too. Well, now people don't see that if they're, working from their home. And the other thing that we're very concerned about is employees and employers need to be technologically savvy in the future. And this takes a lot of training and a lot of adaptation that we need to be cognizant of. Just like you can't have me scared of sharing my screen properly or not, but that is the wave of the future. Finally, the benefits need to be defined. Our employees can also live here, but We can hire employees from away, have them work remote, but our employees can live here and work for anybody now. Almost our competition for talent has gone global in many ways, and we have to adapt to that. There's some facility savings that we may have if we don't need more space, but we want to reinvest that into what we call the employee experience. And finally, the leadership will have to be redefined. Skills that made us successful in the past as leaders really need to be expanded upon to be successful leaders in the future. So that's really an in-depth look of how we're adjusting, how we're doing this. And again, I apologize somewhat to making it Camden National focus, but hopefully you all can see that, all kinds of organizations are asking themselves the same question, or should be, and facing the same challenges. So let me now shift briefly to the mid-coast economy and Maine. And, I really wanted to come down and say, from opportunities and challenges, I think we have to be cognizant. We have a great workforce here in mid-coast, in Maine. And maybe I'm saying that, for more of a hometown pride here, but it is it. I get shocked by the hard work people do. But is our workforce large enough? When people come in, when businesses come in here to relocate, if they have any significant workforce, that's the biggest question they ask of me is, how do you find workers and how do you maintain them here? Is there enough? And so that's one challenge that we need to talk about as a community. We have a great quality of life here, but we're not the only area in the country that has a great quality of life. So we need to define what's our value proposition for our area. And again, remember, people have a lot of latitude now. And we've seen that as people left the cities and moved to our areas, but they moved to other areas too. And finally, or to wrap up on that one, our infrastructure is also good. And I know there's a lot of talk about broadband and it's extremely important to several people on this call here. But we also can't lose sight of the fact that part of that infrastructure, as I define it, includes childcare, especially before and after school childcare. We have no public transportation in our region, and we even have limited taxi service and no ride sharing opportunities like Uber. So to joke around a little bit, this is a great place to live if you have a car and somebody to take care of your kids. And as we look at the workforce, especially the younger workforce, as we talk about broadband, as we talk about other things, there are still some basic elements that need to be on the table for discussion as we look to grow our local economy. And finally, I would say we need alignment. We need to have our constituents, whether individuals or businesses, community leaders, municipalities, community members, to really define what we want as a company. Because the more business investment will be fluid. Business investment will go where people are wanted, and we need to make sure we're projecting an image that we want, if we want it, that we want businesses and the economy to grow here. And if we do, and if all community members are aligned, it makes it easier. And that initial investment from organizations that is welcomed will then spur future business investment into our areas. So we have to be very cognizant of the right messages that we're sending out. Finally, I'd like to just wrap up on workforce housing. And with this has been a major topic since I've moved to the area 20 years ago. And in many ways, the situation has not improved. And a lot of us could argue it's probably gotten worse due to property valuations and appreciation. But I feel we need to gather these four groups together to really talk about this situation. We need developers and builders at the table, community members at the table, financial services companies like banks, credit unions, mortgage companies, also more importantly, homeowners. And I think in the past, we've had a lot of conversations with these first three groups, but we may not be reaching out and talking to homeowners or the people that want to have workforce housing of what their needs are and also their understanding. So for example, there are many programs that banks can participate in, some with the Federal Home Loan Bank and other programs that encourage workforce housing. but they come with some significant requirements at a long term because those programs are designed to increase workforce housing stock, not necessarily for the first homeowner, but for subsequent homeowners. And they're very complicated arrangements and very complicated documents for homeowners to understand. And there has to be an education aspect of it, but there has to be an understanding that this is really the goal of it. And I would just say, really, with the encouragement from the homeowner's perspective is, okay, I've been here 20 years. I'm 60 years old. My children are grown up. I have a very different view of the real estate market and housing than somebody starting out 25 years old trying to buy their first home. And those are the people that we need to find their needs and need to ask them the questions of what do they want and what are they willing to do to help us define what we can then, as a community, engage in. And then I would also encourage, we have to have the community agreement on what we'll do for workforce housing. We can't have the not in my backyard attitude in establishing some of these new communities, new housing areas. Again, we need to set up a process that will be welcoming for all of our residents and community members throughout the area. So with that, I really just want to conclude by saying the pandemic, things seem really good right now. It's sunny, vaccinations are on the way, and it's easy to feel very, very optimistic and relieved. But we have to remember that there's been a lot of struggle, ranging from isolation, illness, and of course, death. The pandemic's been significant and is part of us now. I worry about the impact of the pandemic on the education of children, my grandchildren. But I also believe in the resiliency for us to learn, overcome, and grow, especially if we all listen and learn from each other. So with that, I want to thank the Camden Rotary Club for inviting me here today, as well as for all of you for attending this call. So with that, I'd like to turn it back over to you, Chris.
Thanks very much, Greg. I'm going to turn it over to Rich Anderson and Matt Brown. I did see a bunch of questions come through. So Rich and Matt, go ahead, please.
Yeah, thank you, Chris and Greg. Thank you very much. And I want to be very sure we thank you for the some of the information and insight you shared with us as we're doing our strategic planning. And I hope you see that we're listening to you and we're doing some bold new things that having you here as one of the first banks presidents come and talk to us is a good example of how we are doing things differently because of people like you who challenge us to think differently. But from John Goss, the first question is, when your employees first went remote, how much did broadband quality and availability for your remote employees become a factor for day-to-day business? Did you need any creative solutions?
Yeah, great question. And it was initially an issue. And actually some of the people that did not go remote, but stayed working all this time in the office, is because they don't have a broadband or good internet connectivity at home. So we were fortunate that some of those we solved by letting them come into the offices. And, for example, there's one individual here on the second floor at the main office. She's in that situation, but there have been weeks that she was probably the only person working on this floor. We also had some technology that we could set them up with digital hotspots to do it more through the phone, through their iPhones or other devices that is way beyond my technical understanding. But they told me we gave some people devices to sort it through, but when they couldn't get through their broadband, that is an issue.
Okay, Matt.
I'm sorry, I think you.
Okay. You get in, Matt? Okay, here we go. I'll ask the next question then from Joe Curl. Where do you see future expansion and what will be the impact be on the bank?
Well, the interesting thing about this little community bank here is that we have to grow. And, you've seen it, and that's why we continue to grow. What I expect is we're always looking for opportunities to to deepen, call it our relationships in our existing markets. So actually, just at the start, literally just before the pandemic, we moved to a new location, Damascotta, to deepen that relationship in that community. So we'll do that fill in, but really we, we have to follow where the economy grows. And unfortunately in Maine, and I say that from, growing up in central Maine in Old Town, we have to admit the economy is growing either coastal or south. And so that's where unfortunately, I think our growth will be. It's fortunate that we're sitting here in a community where our home base is, that we have our good fair share of growth, that, that's not threatened.
Thank you. And now I am unmuted. Greg, thanks a lot. The next one is, what are your challenges in recruiting talent? And second part, what can local people do to prepare for careers at Camden National Bank?
Sure. Well, recruiting talent is extremely difficult. And all the businesses around here see that. And it's not just for banking or services like that, but I saw Alan Mitchell on here, and I'm sure he's struggling every day to find good tradespeople to work. And I see the help wanted signs starting to pop up, which on one hand is a great sign to see. But it is intense. And how we try to do it is by offering, a value. Obviously, there's the financial aspect that everyone needs. I mean, as I say, people don't work for hobbies. We have to work, but we also sell on our local decision-making, local career paths that they can have, and as well as just our culture and environment. And some that rings true to people, some it doesn't. Honestly, over time, it ebbs and flows. I think right now we're seeing, for the past several months, people want to come back, join a company in Maine, work here. They want to get out of the cities. That's provided us a lot of opportunities to hire some great folks. But I also know that wave may switch again, because, hey, you can live in Camden and work for a company in Boston, never have to go to Boston now to do it. As far as starting a banking career, there's all kinds of different paths to do it. And I think the biggest hindrance, I will say, is we as an industry, not just in Maine or the region, but across the country, we do not do a good job to explain what a career in banking is. Yes, there's a business aspect of it, but we have a huge technology group, as I've explained some of those things. We have business intelligence data scientists working for us now. We have investment people. And unfortunately in banking, and I used to have that same feeling before I got into it, you just really kind of say, well, it's what I see, out front, in the branch network. That's great. That's a great career path. I always reference one individual I met when I joined here, who was a teller, and today she runs the operations for our whole banking network. So we have that, but we've got to do a better job reaching out, and we try to do that through schools and not only at the college level, but even at the high school level.
Thank you.
Okay, and Vicky Dudira would like to hear a little bit more about the Camden National Bank's employees and their need for attainable, affordable housing and here in the Mid-Coast, and how does the bank assist them?
Yeah, well, it varies a lot, Vicky. What I find is, defining affordable housing for us, we have a lot of people that will commute in. So for me, from my employment base, we're pulling in people from Hope, Appleton, Union. People will even come in from Augusta to us. And so we see that, we draw that. So we don't look at the community, just the Camden Rockport area. And that gives them the flexibility. How we support them is really day one. You have to have the right wage level. And so we do that, $15 is our minimum entry level wage. We provide, benefits. That is critically important. So, people don't have to decide, do I pay my mortgage or do I pay my kids' doctor's appointments? So that's how we support them. And then we have a robust benefit program for that. And honestly, as part of our wages too, we have incentive programs that as the company does well, they do well. And so they can, participate in that. But I feel as an employer, have step one, you gotta pay your people the appropriate wage to afford a house. And it's difficult because the prices are increasing. And I do worry that as I see more and more of my employees commute further and further and further, how does that impact them in their work-life balance? With that said, I think there's an opportunity from a remote work perspective that they can live a little bit further away, maybe in a more affordable community if they want to, and still have a great career here with us.
Greg, I want to thank you very much. We've come to that point. We've run out of time, and your presentation is fantastic. Learn about the humble beginnings of Camden National Bank and how it's transformed over the years into one of the larger banks in our region up here. So thank you very much. It's been fantastic.
My pleasure. Thank you.
President,
The next question comes from, as long as I can find it here, given the unique aspects of our mid-coast area that attracts people to live here and historically start a business that could rely on residents and visitors to make that business viable, what examples of new businesses might be the most successful in the post-pandemic environment?
That's a really interesting question. And my initial reaction is, I think coming out of the pandemic is that it's opened up more opportunities. It's almost like what businesses wouldn't, work. And I think that there's all kinds of opportunities for entrepreneurs. Again, maybe back to Jonathan, your broadband question, that, with better broadband, we'll take in more technology types of people. So I don't think there's, one particular one that would stand out. I think it's really just reaching out and encouraging that type of work. And maybe it's also to say that it's probably more geared to entrepreneurs as smaller companies versus, big organizations that would bring in, 300, 400, 500 people. Obviously, those are more difficult to attract. But I think we have a great environment for, those smaller types of companies and businesses.
Thank you.
Okay, Greg, and from Bob Baldwin, how can one develop affordable housing without going through the time-consuming and complicated federal programs that most developers try to avoid?
Yeah, and I saw that, and that's a tough question. Honestly, I don't really know it from a developer program. I know it obviously from a financing type of one. But I think that is part of the recognition of getting those constituent groups together, is that it's hard work to pull these, these types of efforts together, especially if you're seeking, some type of assistance, a subsidy, or what have you. And it's also that recognition that, I look at a developer can have a choice of doing a high-end development, or if they have the land, or somebody has the land, you could either sell it to the highest price or do it something that's more affordable. And we've got to, as a community, embrace that and embrace them for when they do that, because they're doing it for another reason other than just building a home. So I would say, like anything else, and it's probably a lot of these are on the federal level. It's probably a great discussion to have with some of our federal delegation to see how can we streamline those efforts. Because I know we get caught up in a lot of the paperwork too here at in the banking industry, and we love paper, but so when we say we don't like the detailed work with it, it's a lot.
Rich, do you have any other questions in queue then?
No.
Yeah, I have one more from me. Greg, what kind of difficulties do you have with finding employees with the skills you need locally? And are you thinking in terms of any new approaches to educating for your own specific needs, less attention to whether they have degrees? There's that kind of talk going on. Google is doing, some work in that area right now. And so what do you need in the way of more trained employees?
Sure. And And, Richard, I remember, I think it was you and Graham were chatting maybe a year ago. And I think there's one, just numbers of people available. And that tends to ebb and flow a little bit. And we do operate out of multiple locations now, especially for, call it what we'd call our supportive service centers, where processing people would be finance, et cetera. So we have that latitude, but for, call it the facility here in Rockport, step one is, really just getting the volume of employees. If we have somebody who is a great person, smart, willing to learn, we can take them in, let's say, whether it's from high school or from college or whatever point in their career. We're fortunate enough that we have programs where we can train them and develop them. So for example, we have two major leadership programs. We call them our Horizons program. There's Horizons 100 and 200. That is, basically it's a 9-month program. We put through in each one about a dozen people, all in leadership training that's appropriate for their level, because we feel that we've got to grow our own leaders to do that. And we'll bring in inside and outside expertise there. Pre-pandemic, we would have 2 conferences, leadership conferences, for what we call our officer group. So that was probably, I think that's about 300 or 400 people. And we did it in 2 because we had to break them up. But we'll bring in outside educators for that. So we do take that step to educate people, but it is one thing, again, where we don't do a good job as an industry. We really don't tell people you can join a bank and have a very long, very successful career by internal training we offer tuition reimbursement. And so it's that typical, if you can join us in high school and if you want to take night courses, which again now is really more flexible because of the online capabilities, you can get help with a college degree from us, internal training, and grow your career here. So there's a lot of entry points that we have. And I'm really proud of those employees that I've seen grow through it.
Okay.
Yes, I see.
Well, we've got one more on paper and then we'll open it up just for verbal questions. Greg, this is from Chip Holmes. Greg, has the bank participated in the Maine first-time home buyer program through Maine Housing?
I know we support Maine Housing quite a bit, and we have some Maine Housing specialists from the specific first-time home buyer program. I would assume we are, because we do have a close relationship with Maine State Housing. I would assume yes, but and I've learned long ago, they don't tell me everything that we're doing here, but we're involved in it. And actually, I remember the first home I bought was through Maine State Housing, so I have a personal affinity through it. So.
Okay, so I guess anybody want to chime in with some just their own question?
Householder, you can hand up. Richard Householder, you're muted. There you go.
What was the impact to your business when the CARES Act was created?
It was actually significantly positive. Step one was the big banner one that we would impact is the Payroll Protection Program, or PPP. I think we did approximately 3,000 of those loans, but that got money to people businesses that really needed it. And it really propped up, call it the financial stability of the economic environment. In the CARES Act, it's a little arcane, and I'm a little bit geeky on this, but I'll spare you the details. It gave banks a significant amount of flexibility to work with its borrowers through those initial months. So you go back to June, we put 25% of our loan portfolio in deferred payments, 25% of a $3 billion loan portfolio, to give people relief. A lot of those are businesses, but many of them were individuals as well. We deferred a lot of those payments for anywhere from 6 to 9 months last year. And that was all due to the CARES Act. And the CARES Act also gave us some flexibility to allow us to work even to this day with borrowers. So without the CARES Act, I can tell you, the economic condition of this country would be drastically different within that. And that doesn't even touch on the stimulus money that went through.
Thank you.
Ruben,
I'm a director of the Maine Ocean School Foundation up in Searsport. And one of the things that Maine Ocean School is focused on is growing experience for young people in the marine industries and shore jobs and harbor jobs and floating windmill platforms and new onshore things. How does the bank get involved in sustaining an industry that needs to grow people for itself? Marine industries, for example.
Sure. Well, we partner with a lot of organizations, and Ruben, on our website, we have a link for, donation, our donations and philanthropy effort. And so we work with a lot of different organizations to support some of those programs throughout our communities.
Do you have a role envisioned yet with the Lyman Morris expansion in Camden?
Not yet, except, we know the folks over there, quite well, and we're hoping they continue to do the great job that they're doing. That's a great success story, literally across the harbor over my shoulder.
Greg, just curious, yesterday in the Wall Street Journal, they were talking about how big banks had set aside quite a bit of reserve for anticipated foreclosure of failures, and that didn't happen. And so now they're projecting banks are really going to come back strong. Does that apply to you local? Is that happen with the local banks as well?
Yes. So last June, I think we put aside close to $10 million for anticipated problem loans. Again, that's kind of normal. That's like financial recession management. So, I don't want to underscore it, but that's kind of what an old-time banker does. I'm at the point where even though we're seeing a strong economy, a lot of people are doing well, I still say there's artificial things going on there, whether it's deferred payments, which I just explained. And so I know I get a lot of questions. Well, when will you release the reserves, which is what that article you reference is getting at? I just respond to people, look, I've been through this before, and now is the time to strengthen your balance sheet by reserving for that rainy day, if you will, rather than to say mission accomplished and it's all going to go back to normal. So a little bit, maybe I'm a contrarian there, but hey, everyone probably here on the call knows Camden's so conservative, and hey, 146 years, it's done us well. So I don't expect a change to that.
Good, thanks.
any other questions for Greg? Greg, I want to thank you very much for not only joining us today, but staying late. It was fantastic. And as a reminder to all those, this meeting will be on our Camden Rotary Club website. We've recorded it, and so it will be available. Give us a week or so, and you'll have access to it at that point. So with that, I want to thank you all for joining us. And unofficially, we already officially ended it, but we're going to say goodbye again. Greg, thanks again, and thanks to all those others who joined us today.
You're welcome. Thank you. Nice seeing you all. Bye now.
Thanks, Greg. Great job.
Thank you.